Hi guys, it's Stock Curry, and in just a minute, I'm going to give you every single stock pick from the top 10 YouTubers. But first, let's do a market update. I want to talk to you guys about how to trade in the current market environment, how to be successful. I also want to talk to you about where I see the stock market going in the next few months and also the next few years. So let's get into it. First of all, what are we doing right now? Well, we know that this market is extremely volatile. I mean, it is impossible to tell where a stock is going to go from day to day. If you're trying to predict a stock price's movement tomorrow or next week, just stop. You're probably not going to do it. Now, intraday, day to day, you want to day trade? Fine. This market is a day trader's dream because the stock prices are moving so much right now. However, on a swing trading perspective, you just can't do it. Personally, that is my most successful trading style, is swing trading. I make by far the most amount of money when I swing trade. But right now, you just can't swing trade. It's too volatile. In order to swing trade, we need a consistent movement up or a consistent movement down. And right now, we're not getting that. We're just all over the board. So don't short-term trade, don't swing trade. You can't do it. Short-term trades are okay on very specific stocks and very specific situations. Like, for example, if we get major news that comes out that moves a price massively, we can do a short-term trade. There's short squeezes that happen from time to time. You might want to do a short-term trade on those. But generally speaking, for most of your stocks, we're not going to do any short-term trading because you just can't make money that way right now. And so the only thing that we can really do is either day trading, but that requires us to sit in front of a computer all day and watch the markets nonstop. And most of us have jobs and we just can't do that. So the only thing left is long-term holding. So how long is long-term and what do we buy? So let's take a look real fast at where I see the stock market going over the next few months. The biggest catalyst that I see in the economy over the next few months is the pandemic reopening plays. Things like your cruise lines, your hotels, your airplane stocks, things like that. Things that have been shut down for a long time that now we expect they're going to reopen, things are going to get back to normal, and these companies are going to be able to start generating full profits once again. These are going to be our best stocks. So it includes everything from like movie theaters like AMC on over to your cruise lines like Norwegian Cruise Lines or Carnival, CCL. It also includes your airline stocks like AAPL or SAVE, things like that. And then we've got your DIS, Disney, because their parks are reopening. And maybe some of your restaurant stocks, anything like that. That's what we're really looking for as far as a pandemic reopening play. Now, it doesn't come without risks. Why? Because, I don't know, a new strain of the virus could come out and the vaccine might not be effective against it. And then everything gets shut down again. I don't know. I mean, these are the risks, right? It's not a guaranteed play. Nothing ever is. However, that looks like the best bet as of right now. The next thing is we need to start looking a little bit longer term, say 3, 4, 5 years down the road. And for those stocks, what I like to do is I look at the companies that are going to be disruptors and innovators into the future. That's why I love NNOX. It is a complete game changer when it comes to x-rays. It's a brand new, well, it's actually not brand new. It's 100-year-old technology that just never got used. And then they were like, oh, wow, this stuff actually works. They implemented it, they digitized it, and now we get x-rays for way less money. And the quality of the x-rays is also significantly better. There you go, a complete industry game changer. I love NNOX. BNGO is another one with their Sapphire system and the structuring that they're doing. It's incredible. They are finding diseases that have never been able to be tested before, and they are saving a ton of money. It's a wonderful, wonderful system they got, and they're working on the next iteration, which is crazy. So BNGO, another one, game changer, right? So I'm looking at these stocks. Let's see, NNDM, that's another one where you can 3D print circuit boards. Just blows my mind. So anything that's going to be game changer in the industry, that's what I'm looking at. Let's see, SKLZ is another one, right? Where they're changing the skill-based online gaming. Those are the stocks for really long-term plays, 3, 4, 5 years down the road. The other thing is, because we can't really predict what stocks are going to do day to day and how things are going to go. I mean, a short seller could hit any stock at any moment and completely tank the stock, even if it should be going up. We saw that with NNOX. We saw that with a lot of different stocks. And so keep that in mind, is nothing's guaranteed. We got to be careful. We got to be vigilant. And so what I am doing is I am diversifying way more than I normally would. In a normal bull market that's very stable, I can swing trade. At most, I'll have 10 stocks in my portfolio. Usually I have about 5 to 6 stocks in my portfolio at any given time. Right now, I've got 30 plus stocks in my portfolio. I'm quickly getting up to 40 stocks. I am just diversifying the heck out. Why? Because what I have seen happen is I might buy a stock and it'll go down like 8-10% within a day, and then a week later it's up 15%. I might buy another stock, it's up 5%. The next day it's now down like 13%. I mean, stocks are all over the place. I can't keep up. It's crazy. So I just buy a ton of different stocks, and overall, in general, my portfolio has been going up. Now, of course, I'm not going to make money every single day. I lost some money today, but you know what? I'm still way up in the week. I'm still way up in the past 2 weeks because I have a much longer term perspective. I'm not worried about day-to-day price movements, and honestly, you should not be either. The next thing I want to talk about is this. Be very, very careful with the fundamentals of the companies that you're buying. The reason is because we are in such uncertain times, there is no guarantee that the stocks you buy are actually going to, well, the companies may be out of business. Let me give you an example. CTRM, darling stock, everybody loves it. Right now, you should be out of that play because the stop loss price I gave you, you should have been stopped out. And so nobody should be holding CTRM right now. We're waiting for a bottom on it. We don't know when that bottom is going to be. But the thing about CTRM is this. That company is heavily in debt and they are not making any money. They're unprofitable. And so that is a very, very risky company. That is a company that could be out of business. Now, it's a gamble, right? We have a stock that they should be profitable. If they can hold on for a few more years, they should be profitable. But they need to get to profitability quickly so that they can start paying off all the ships they just bought. If they can't get to profitability, if they fail to do that for any reason, say pandemic shutdowns happen again, CTRM is going to be in a lot of trouble and they could easily go out of business. I'm kind of treating CTRM as like a long shot option right now, right? Like you throw 50 cents in, it might go to zero, and who knows, it might go to $17. I don't know. It's a gamble. Personally, I think the upside is greater than the downside, but I also realize that I'm fully comfortable with the fact that CTRM may become worthless in a very short period of time. So just keep that in mind. You got to be really careful. What stocks are safer bets? What stocks have a lot of money that you might be okay with? Well, it's going to be stocks like TSLA that's been around a long time. They have a ton of cash on hand. Stocks like NNDM that's got $1.5 billion in cash. They're fine. Stocks like NNOX, they have no debt. They have plenty of cash. They're fine. And so those are the kind of companies that you want to be focusing on. Just for a little while, for the next few weeks or months, maybe stay away from stocks like CTRM. Stay away from the stocks that are heavily in debt and unprofitable because they're just too risky right now. And short sellers are jumping on those with any opportunity they get, and they're just driving the price of those stocks into the ground. Same thing with SPACs. Short sellers are attacking SPACs like crazy right now. I would not buy any SPAC unless you can get it for right around $10. Seriously. They are just getting destroyed right now. And especially after the merger completes and the SPAC no longer has a $10 floor, at that point, short sellers can push that price down to whatever they want. And we've seen that happen on quite a few stocks. They've dropped way below $10 after the merger occurred. So I just want to throw that out for you as well. I would maybe stay away from SPACs for a little while. I know I personally own ACIC. But even that one, I'm a little like, CCIV is another one that I own that I'm being really careful with, because honestly, both of those are just, they're SPACs. They might not do well. These are a SPAC. You really got to kind of look at it as like a pre-IPO company. Very, very, very risky and could easily go below the $10 value once they merge. And short sellers are jumping on that, and they're driving these prices down, and a lot of retailers, a lot of retail investors are losing a lot of money because of that. So just be careful. That's all I got to say right now is be careful. I would do long-term holding. I would be very diversified, and I would just be really, really careful right now. All right, real fast, I want to talk about super long-term. Where do I see the economy going? Yeah, it's not good. Right now, the economy is artificially propped up with the trillions upon trillions of dollars that got pumped into the economy over the past year. And what is that going to eventually do? Well, eventually it's going to cause inflation to go way up. The Fed is going to have to slow down inflation. They're going to do that by raising interest rates. It's all bad news for the economy, and it's all bad news for stocks. In addition, we have a lot of, say, market crash catalysts that have been put on hold for a long time. For example, real estate. Real estate is in a huge bubble right now, and it should crash, but it just can't because some catalysts have been put on hold. Specifically, nobody can get evicted and nobody can get foreclosed upon. So what does that mean? Well, right now you've got tons and tons of renters that aren't paying their rent, that can't get evicted, and the owners of those properties have got these mortgages that they have to pay, but they can't because they have renters that aren't paying rent. So what's happened? Well, the mortgages are now going under. There are millions upon millions of homeowners that are behind on their payments, can never catch up, and they're not being foreclosed on because they can't be. And so now banks are stuck with all these mortgages that are, they're behind on payments. It's a terrible, terrible situation. As soon as President Biden allows foreclosures to take place and allows evictions to take place, it's going to be terrible for the real estate market. The real estate market is going to crash. Why? Because a ton of homes are going to flood the market. All these homes are going to get foreclosed upon. Millions and millions of foreclosures are going to flood the market. And with a huge increase in supply, that's going to push down the price of homes. And that's going to trigger a market crash in real estate. It's coming. I don't know when it's going to come. It's whenever Biden decides to allow foreclosures to happen. Could be this year, could be next year, could be 2-3 years from now. I don't know. But it's going to come. And a lot of the same things with the stock market. As soon as the Fed stops printing money, as soon as they stop buying back bonds, at that point, you're going to see the stock market and bonds start to crash as well. So guys, I just want to warn you guys, be careful, be careful, be careful. Yes, there are some good things coming up, but long term, it is not looking good. When we do enter a bear market, and we will enter a bear market, I don't know if it's going to be a year from now, 2 years from now, 3 years from now, but we'll eventually get there. We are going to have a completely different game plan. We're not going to be doing stock picks anymore. It's all going to be about gold and silver and Bitcoin, and it's going to be about put options and shorts and things like that. It'll be a completely different channel. You're not even going to recognize this channel because we're going to shift in order to make money. So I just want to throw all that out there for you guys and give you some things just to kind of think about. All right? Okay. All of that said, let's get into today's stock picks. Now, for those of you guys who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stock picks from the top 10 YouTubers. I then compile all of my analysis into a daily video that I post right here on this channel. I spend hours every day watching YouTube videos so that you don't have to. All you have to do is watch this one video each day, and you will get every single stock pick from the top 10 YouTubers. And all I ask in return is that you hit that like button, subscribe, and click the bell icon so that you can get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. I just want to remind everyone that I'm not a financial advisor, and none of the YouTubers I follow are financial advisors either. Today's video is strictly for entertainment purposes only. For those of you who are wondering, you are currently looking at the Webull desktop app. Webull is the app that I use for my trading, and it is also the app that I use in all of my videos. All right, let's get into today's stock picks. First up is AAPL. This is Apple. Chris Sain said AAPL should be a pillar of your portfolio. This is a consistent long-term growth stock. Next up is AMC. This is AMC Movie Theaters. Trace Trades released a video Wednesday clarifying that he will vote no on the 500 million share dilution because the company did not provide enough information on what they plan to do with those shares. I will remind you that StockMo said he will vote yes. Trace Trades also uploaded a second video Wednesday night covering the AMC short interest. In short, AMC short interest is up over 11% in the past 7 days, and 93% of the available shares have now been borrowed. Short interest is still less than 20% though. If you want the full details, I recommend you watch Trace Trades' video that he uploaded Wednesday evening. I will also let you know that Trace Trades uploaded another video Wednesday night with Jordan Belfort from the Wolf of Wall Street, and that was an incredible video. I highly recommend everybody go watch Trace Trades' video with Jordan Belfort, the Wolf of Wall Street. Next up is APXT. This is a SPAC, and they're merging with AvePoint, which is a data management company that is specifically focused on the Microsoft Cloud. Chris Sain mentioned APXT again today and said he is still holding. Today is the first day where I can finally recommend buying this stock. Today is the first day where the technicals are all bullish. The MACD just formed a golden cross and is rising, the RSI is rising, and the candle finally got above the 10-day EMA intraday on Wednesday. If you've been waiting for the right time to buy APXT, the time is now. Next up is ARDX. This is ARDX, and they're a pharmaceutical company. Keenan Grace let us know that ARDX has a potential FDA approval coming up on April 29th. This is for a new treatment for a drug that already has FDA approval and is already on the market. So I don't expect an FDA approval to move the share price too much. That said, the average one-year analyst price target is $14, which represents an 83% upside from Wednesday's closing price. Next up is BNGO. This is Bionanogenomics. Keenan Grace let us know that BNGO announced a continued global expansion of its Sapphire system with the addition of a new customer in South Africa. To be fair, this is just one additional sale. It's exciting from a long-term perspective because this is their first sale in Africa, so there could be more to come. But in the short term, it's just one sale, and the stock was still down over 5% today. Personally, I'm waiting for BNGO to drop down to around $7 before I buy. I'm expecting a bounce off of the 100-day EMA, which closed Wednesday at $6.89. So I'm going to raise my price point slightly. I'm going to give you a new buy-in price of $7.25, an ideal buy-in price of $7, and a stop-loss price of $6.10. Next up is CCIV. This is a SPAC and they're merging with Lucid Motors. Lucid Motors is an American EV company and a competitor to Tesla. The merger is supposed to happen sometime between April and June of this year. StockMo bought the January 2023 $25 call for $11.30. That call closed today at $11.50. The break-even price on this is $11.50 plus $25, which equals $36.50. So if CCIV gets above $36.50 in the next 2 years, StockMo will make money. This option is expensive with implied volatility greater than 100%, but I think a price of $36.50 in the next 2 years is very reasonable. And by the way, if you are new to options, just keep in mind that options are contracts for 100 shares. So for every price I just mentioned, multiply by 100. That $25 option will cost you $11.50 times 100 or $1,150. Next up is CTRM. This is Castro Maritime, and they are a commercial shipping company. Keenan Grace reminded everyone not to go down with the ship on this stock. Keep in mind that the last time we talked about CTRM, I gave you a 55-cent stop-loss price, so now the question is, where does CTRM bottom out? And unfortunately, there are no more support levels, so it's really hard to know where CTRM is going to bottom out. I can see some minor support at around 43 cents, so that's one possibility. Ultimately though, I would just wait for CTRM to show a clear sign of bottoming out and turning around before you buy back in. The RSI is oversold, so I don't think we'll have to wait too long. Next up is FB. This is Facebook. Chris Sain said FB is a proven winner. He called it an easy money play due to the low PE ratio. Now, I calculated the PE ratio, and the current PE ratio is 81.11. Okay, I guess that's low compared to stock like, I don't know, Tesla with a PE ratio of 1,500, but Generally speaking, when you're looking at PE ratios, low is considered anything under 15. 81 would be considered quite high. Next up is FSR. This is Fisker, and they're a car company getting into EVs. Stockmo likes the January 2023 $17.50 calls. He thinks FSR could get to $40 to $50 in the next 2 years. At $7.50 per contract, the $17.50 January 2023 call has a break-even price of $17.50 plus $7.50, which equals $25. So if FSR gets to $40 in the next 2 years, Stockmo will make $15. In other words, he will double his money in the next 2 years if FSR gets to his price target. Now personally, I don't like buying FSR options right now because the implied volatility, or VEGA, is nearly 100%. You can probably buy this option for around 20 to 25% less if FSR trades flat for the next month. Technically though, I do think that FSR might bottom out here at the 200-day EMA. It has now bounced off of that 1, 2, 3, 4 times, but the RSI and MACD are still both bearish, so just be careful with this. This may be near a bottom, but it might have a little bit further to go. Next up is GNOG. This is Golden Nugget Online Gaming. Chris Sain said last month that he expected GNOG to start going up at the end of May. Wednesday's candle was bearish. It looks like GNOG hit resistance at the 50-day EMA, so I wouldn't quite buy GNOG just yet. I would wait for it to get above the 50-day EMA before buying. In my mind, that would be confirmation of bullishness. Next up is JMIA. This is JMIA, and they're an African e-commerce company similar to Amazon. ZipTrader said JMIA is trading well below where it should be. He thinks JMIA will double in price. Next up is NIO. This is NIO, and they're a Chinese EV manufacturer. Stockmo owns a January 2023 $35 call that he purchased for $13.85. Stockmo's break-even price on this call is $49. So if NIO gets above $49 in the next 2 years, Stockmo will make money. Now technically, NIO is still in consolidation, although it has bounced off the 200-day EMA quite a few times. So if you're looking for a buy-in price on NIO, I think anything around $36 to $35 would be a great price to buy in at. Next up is NNDM. This is Nano Dimension, and they're a 3D computer chip printer manufacturer. Richard Allen let us know that NNDM just got a new president. Yoav Sturm, the current CEO, will become chairman of the board. The new CEO will be Zivi Nedivi. Zivi Nedivi has served as the CEO of a number of companies in the past. His past companies were suppliers for the US and NATO militaries, and Zivi Nedivi himself is a former military fighter pilot. I think that's a great fit because we already saw XONE get a huge military contract, so we know the military is interested in 3D printing technology. Most importantly, Zivi Nedivi has experience with acquisitions. He grew one company from $8 million to $330 million in just 5 years by acquiring 9 different companies. That's what everybody has been waiting for with NNDM. We're all waiting for NNDM to use its massive cash pile to start acquiring companies. If you want to know more, I recommend you watch Richard Allen's video that he uploaded Wednesday. Next up is PLUG. This is Plug Power. They're a hydrogen fuel cell manufacturer. Stockmo said he thinks PLUG dropped too much. Stockmo is looking into buying a leap call option on PLUG. He's looking at the January 2023 $35 call for around $13. That would give Stockmo a $48 break-even price. Next up is SOS Limited. They're a Bitcoin miner. Chris Sain recommended buying a put option on SOS. That's funny because after hours on Wednesday, I bought SOS at $5.54. Chris Sain thinks SOS will cool off Thursday and Friday, and honestly, he's probably right about SOS cooling off on Thursday. Chris Sain is looking at buying a $6 weekly put option expiring on April 9th. Chris Sain is looking at this as a day trade, assuming SOS pulls back. As I've said in prior videos, using options to day trade is fine. Personally, I don't like trading options on stocks that are under $10 because the potential profits are just too small to outweigh the risk of the option dropping to zero. So if you really think SOS is going to have a pullback, I would recommend you short the stock instead of buying a put option. If you do short the stock, don't forget to set a stop loss at 10% above where you sold it at. Otherwise, you could lose your shirt. Next up is TSLA. This is Tesla. They're an American EV manufacturer. Keenan Grace likes the pullback on TSLA. Tesla dropped because they announced that they were delaying deliveries of their Model S and Model X. But honestly, that makes sense. A monkey could have seen that coming when they announced their delivery numbers. Why? Because even though Tesla knocked their delivery numbers out of the park, one thing they said was that they only manufactured the Model 3. They didn't manufacture any Model S or Model X. So of course they're behind in deliveries on those two vehicles. Tesla's problem right now is that they can't keep up with demand. They are producing as many cars as they can, but they just can't produce them fast enough. Tesla stopped production on the Model S and Model X so that they could install new machines for their updated vehicle designs. They also said when they announced their delivery numbers that those machines had been installed and that they were ready to restart production on those two vehicles. So the delay really doesn't bother me at all. This just provides an opportunity to buy TSLA on a dip. Finally, we have VUZI. This is VUZI, and they're an augmented reality company that already has a lot of customers. ZipTrader recommends selling VUZI and taking profits. By the way, if you find yourself buying stocks that get recommended on YouTube, but then not sure of when to sell, I strongly recommend that you go enroll in ZipTrader U. ZipTrader U is a training course, and honestly the best one on the internet that I found, that will teach you not only when to buy stocks, but more importantly, when to sell them. It'll show you how to do technical analysis, fundamental analysis, how to find stocks, and all of that stuff. I was able to negotiate a 15% discount off of ZipTrader U for you, so if you want to take advantage of that, just go look in the description of this video for the 15% discount on ZipTrader U. Alright, I hope you enjoyed this video and get a lot out of it. Comment down below what your favorite stock pick is. And if you want to get some free stocks, sign up for Webull using my link in the description below. When you sign up using my link in the description below, Webull's going to send you 2 free stocks when you deposit just $100, and those 2 free stocks are going to be worth up to $1,850. It's an incredible deal. They're also going to give me 1 free stock, so it helps you out and it also helps the channel out. Finally, remember to hit that like button, subscribe, and click the bell icon if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.